Hello, everyone. My name is Joanne Barefoot. I am CEO and co-founder of a nonprofit called the Alliance for Innovative Regulation, or AIR, and I'm delighted to welcome you to our panel today on the idea of a digital dollar. The COVID pandemic is creating heartbreak and damage all across the spectrum in our health and our economic situation. But at the same time, we can see it breaking open new positive possibilities, including that we're seeing adoption of digital solutions all across the spectrum, from financial services to online dating. And so we're going to talk about one of the areas where a good idea that has been developing for a long time is getting traction today, perhaps accelerating because of the environment that we're in. And I'm thrilled to be able to say that we have the two foremost people with us to talk about that. Our panelists are Chris Giancarlo, who is the former chairman of the Commodity Futures Trading Commission, and Daniel Gorfine, who is the former head of innovation at the CFTC and was the head of Lab CFTC. So I want to welcome both of you. I want to ask each of you to just take a moment to introduce yourself a little more fully, and then we'll start our conversation. Chris, do you want to start?
Sure. Thank you, Joanne. Thank you very much for that. Well, I should start by saying that I'm also a member of the advisory board of AIR, which is doing some fantastic work in the field, and it's part of a portfolio of things I've been doing since leaving the commission. Before I went into public service, I spent 30 years in the private sector, really building marketplaces, in my case, marketplaces for over-the-counter derivatives. And then after 5 years at the commission, have returned to the private sector, where I've been focusing on a range of activities, all having to do with modernization of a lot of our financial infrastructure, looking at digital technologies and how that can modernize a physical infrastructure that's been, in many cases, in too many cases, been allowed to become obsolete in the 21st digital century. So we'll talk more about that during our program today.
Wonderful. And Daniel.
Great. No, thanks so much, Joanne. Great to join you, at least virtually here. As you mentioned, I'm the former Chief Innovation Officer and Director of Lab CFTC at the U.S. Commodity Futures Trading Commission. I was fortunate to be in that role thanks to being appointed by former Chairman Chris Giancarlo and served my time at the agency during his tenure. I left last summer and founded a boutique fintech advisory and consulting business. I also serve as an adjunct professor of law at the Georgetown University Law Center. And for purposes of this conversation, am one of the co-founders of the Digital Dollar Project, which, as we'll talk about, is focused on exploring a U.S. central bank digital currency. Now, just quickly working backwards, I spent a number of years in the fintech space, leading external and regulatory affairs for a fintech small business lending platform that went public back in 2014. And prior to that, spent a fair number of years in the think tank world, kind of looking at how fintech is impacting existing regulatory and policy frameworks and trying to figure out what needs to adapt or change to facilitate some of the changes in our world. So we're glad to join you and look forward to the conversation here today.
Daniel, I think you may have been the first regulatory innovation officer in our federal agencies who came from a fintech, which was a wonderful breakthrough. So very good thinking on your part, Chris.
Well, he was the first chief innovation officer in a federal regulatory agency, full stop. So
there we go.
Yeah.
And I'm proud to say that, Daniel, you too are an advisor to us at AIR, and I've had you both on our podcast show, Barefoot Innovation, which I would encourage people to listen to those episodes. They were fantastic. So it first came to my attention that you two were working on the digital dollar when you wrote an op-ed in the Wall Street Journal a year or so ago, maybe more. So let's start by having you tell us the origin story for this work.
Well, maybe I'll start off, and Daniel will bring his own perspective. But after 5 years, not just at the head of a U.S. lead financial regulatory agency, but also serving in a lot of the international bodies that look at standard settings in financial markets, I came to a sort of an observation that just as so much of our physical infrastructure, our bridges and our tunnels and our airports and our mass transportation systems that were once state of the art had sadly been allowed to age and decay, in some cases become obsolete. So is true about a lot of our financial market infrastructure. A lot of the payment systems, settlement, clearing systems that were once state of the art in the 20th century have become somewhat obsolete, slow, and expensive and cumbersome. And that leads to the second observation, is that we're truly entering into a new wave of the internet, the second wave following the first wave, which was an internet of information. We're now going into an internet of value. Things of value are becoming digitized, decentralized, and ultimately will be programmable with smart contracts. Well, if you think about the clash of those, that is that obsolete technology and this new wave of innovation, something's got to give, and it's going to be those old systems unless we take steps to modernize things now. And there's no more architecture that's more central to an economy. It's the bedrock of an economy, or the footings, the foundation of the economy, than the currency. And that's what got Daniel and I last summer, as we were leaving the CFTC, to think about the dollar itself, and whether it was the development of Bitcoin coming out of the last financial crisis, or acceleration of China with its digital RMB program, or whether it was the development of Libra's project, ultimately the COVID crisis. But all of these elements have been leading to a real broad-based discussion on what a digital dollar, what a US CBD should look like. And so it was last summer that Daniel and I started this conversation. There was a third founder alongside us. That was my brother, Charlie Giancarlo, who is a Silicon Valley entrepreneur. And the three of us started kicking around some ideas. We did the op-ed in the Wall Street Journal, and then we teamed up with Accenture late last year, and in January launched the Digital Dollar Project as a not-for-profit foundation with Daniel, myself, and Charlie Giancarlo, and then as a pro bono exercise by Accenture to create the project. But I'll turn it over to Daniel. He's got some perspectives on this as well.
Yeah, thanks, Chris. And look, this is going to be very much in line, I think, with what you just shared. But I'll say from my perspective, having spent a number of years, at the agency and generally in fintech, looking at topics like crypto and tokenization and blockchain, when I stepped back after leaving government and asked myself what were the primary takeaways, I think it was a pretty straightforward one. And that is, we know the internet connects computers directly. And to your point about the last generation of the internet being around information, we know you can send an email which contains information halfway around the world to another individual, relying on fairly few intermediaries, doing so efficiently and at very low cost. And I think what tokenization, crypto, blockchain, what this all represents is the idea, Chris, to your point, that you can now send information about value and about unique ownership of value halfway around the world with relatively few intermediaries and at low cost. And so ultimately, that dynamic is going to impact the way we transact, I believe, in all types of financial instruments. And to the point, Chris, that you said, we realized that that's going to touch the money as well, and that will have an impact on the US dollar. So I think we thought it was quite important heading into the latter half of last year to focus a little bit more of a national discussion around what the implications would be of tokenization of money. How does that touch the US dollar? What are some of the proactive things that we should be thinking about and doing as a country to make sure that we future-proof the role that the dollar plays in a global economy? And this is not something that you can snap your fingers and decide a few years from now that you just want to go ahead and tokenize the US dollar. There are a lot of profound implications of that, which is part of the reason why through launching the Digital Dollar Project, we made it a focus to bring together a very comprehensive advisory board of individuals who represent different stakeholder groups, have different perspectives. Some are focused on banking, consumer protection, financial inclusion, privacy, technology. You need to bring all of those disciplines together in order to really think through implications, think about design choices, and ultimately talk about what are the recommendations that we would suggest, to the public sector as well as to the general public around how you do tokenize a US dollar.
So I want to actually come back to talking about the design that you've put together for the project itself, which I think is extremely interesting. But before we go to that, talk to us about how the world would be different. If we had a central bank digital currency in the US, what would be different about how we operate?
So there's so many aspects to that. The segments of society that are well banked, a digital dollar would create more optionality, would give them a bearer instrument, a digital electronic bearer instrument on their mobile device they could use to pay for goods and services. They could use it not just in physical analog transactions, but in online transactions where fiat currency cannot be used right now. So it creates payment options. It's not meant, we don't envision it replacing credit card services. We don't envision it replacing credit transactions. We don't envision it even replacing physical fiat, which serves uses that should remain. So we created it as an additional form. But that's one element of this. That's the retail element in a well-banked society. Once you get into underbanked or unbanked portions of society, we've seen that digital payment systems in Africa, for example, with M-Pesa in Kenya and others in Nigeria, have brought a lot of a young population that's very mobile savvy, but yet underbanked, into financial inclusion. And we think a digital dollar could play some of that role in sectors of the U.S. society that are underbanked. Not all, it's not a panacea for issues we have more broadly in terms of financial inclusion, but it's a gateway into financial inclusion. You know, a big portion of that 24, 25, 26% statistically that are underbanked are actually young people that while they have maybe rudimentary banking services, they don't have mortgages and they don't have car loans. And so therefore they're considered to be underbanked. But in fact, they are very proficient in terms of mobile device users and may be using already Zelle and Venmo and other electronic payment systems. So for them, this would be an attractive feature. But we've been talking about retail. Once we get into wholesale, once we get into international payments, we know that the systems that are in place there go back to the 20th century. They are expensive. They are complex. They are inefficient. They have there's a lot of rent seeking associated with them. There are a lot of elements of that system that serves to support that system that could be transcended, monies that could be put to other uses, inefficiencies that could be ironed out, and capital deployed to other uses if we had a digital currency system. So there's a lot in this that goes beyond just the retail. But just for the way I describe it, when I describe it to people who say, why do I need this? I say, well, if you're out on a Saturday afternoon, you've got a few coins in your front pocket, you've got a few $10 bills in your back pocket, you may have a credit card in your wallet, and even a debit card. This would give you something on your mobile device that would allow you to have additional optionality alongside those other means of payment.
Daniel, do you want to add to that?
I think Chris covered that very well.
Okay. So let me say to the audience, if you have questions, please put them in the chat room. I'll keep my eye on that and try to get your questions to the panel as we go along. So talk a little bit about the global issue. There's a great deal of talk about China's interest in issuing a digital currency. How do you see the international landscape developing? What implications might there be for the US dollar as the world's leading currency going forward? What's ahead in that space?
Daniel, I dominated the last one. Do you want to take this one?
No, I'm happy to, and I think it's a great question. And look, let me start with this point. So it's clearly there are many public sector and private sector initiatives that are taking place around the world, and net, that's a positive. Now, we're not viewing this project and the idea of tokenizing the US dollar as a defensive measure. Rather, it's an offensive opportunity to upgrade kind of the public financial infrastructure that underpins money. And we think that there will be a lot of benefits and innovation that develops on top of that infrastructure. So let me actually just walk through for a moment. I think it's worth me kind of setting out what are the characteristics or what are the design elements that we think may, in some instances, differentiate a US CBDC from some of the other global projects that you're seeing. And so what we did is we published a white paper from the Digital Dollar Project about a month or so ago, and it lays out a champion model for what we think a tokenized US dollar should look like, and it has certain design features. The first element is around tokenization itself. You know, there are accounts-based systems and there are tokenized systems, and we believe that our champion model looks to create, as Chris said, kind of a digital bearer instrument, much like you have physical cash, which is a token, but it represents a claim on the central bank. It's a central bank liability. What we're creating here is something that would be a digital, not even a representation, but it's a digital symbol. It's a digital token of a central bank liability. So creating a bearer instrument within a digital economy, we think has many, many benefits, including the potential for programmability of money. A second important characteristic, which may distinguish from other projects, is that we believe that distribution of the tokenized dollar should run through the existing two-tiered banking system, meaning that you would access US CBDC through banks or regulated fintech entities that may be state-based money transmitters. But we do not believe in the concept of, we've heard talk around Fed accounts, the idea that retail individuals would have a direct account with the central bank. We do not believe that should be the system that underpins a digital dollar. If there are failures and inabilities of reaching a full population, you might look for public sector solutions, but the underpinning would still be the two-tiered banking system. Privacy is another huge element, and it's an area that we're going to focus extra attention in terms of striking the right balance and considering trade-offs between privacy expectations and appropriate regulatory interests, including law enforcement and application of the Bank Secrecy Act. Our hope is that it may not be as black and white of a spectrum as some may expect. We think technology may be able to help serve both interests in terms of, satisfying KYC requirements, but also upholding traditional U.S. norms around privacy. Chris has made a point, and maybe he'll jump in a moment or two on this, but that the U.S. has constitutional protections around, government access to information. That's Fourth Amendment jurisprudence that gives us kind of an additional potential layer of privacy protection. And again, that may be a distinction versus other central bank projects. The last point I will hit on is I kind of said at the outset, this is public infrastructure upon which additional innovation can be built. And so the point here is to say the digital dollar does not need to be, and nor should it be, antithetical to private sector innovation. I've increasingly thought about this infrastructure as being akin to the highway system. Did public highways have an impact on private transport businesses? Absolutely. But did it create new and better private transport businesses? And did it allow further economic development and activity to build upon that infrastructure? Yes. And that's, I think, very much the way that we view tokenization of the US dollar and all that it will ultimately enable.
And interesting, that analogy, because the federal highway system didn't supplant other efforts by states and local areas in doing highways as well. And so we're not calling for suppression of any other efforts in the private sector, but we are advocating that the U.S. government should embark upon exploration of a digital dollar. Let me turn to the question you began with, Joanne, which is what's going on around the globe, and maybe just a little travelogue to what's happening. The fact of the matter is the majority of central banks around the world, especially all of the major economies, are all looking at central bank digital currencies in a very serious way. Andrew Bailey, the new governor of the Bank of England, recently said that he sees that in the future for the British pound. We know that the Bank of International Settlements, which is the bank for central banks, the central bank of central banks in Switzerland, is doing extensive work in this. They have an innovation lab themselves there. They're looking into this. Sweden is embarking upon a cashless monetary system. The Riksbank, one of the world's oldest central banks, is doing a full experimentation with a digital krona. Switzerland is looking at this. Singapore is well advanced and they're looking at this. Japan is looking at this. And then, of course, there's China. China is announced some time ago the development of a digital RMB. We know they have developed this extensively in a number of provinces in China. They're now actually paying government workers in digital RMB. They've got a payment system. They've actually proposed an inter-Asia, a development of an inter-Asia currency based upon a basket of Hong Kong dollar, China yuan, the Korean won, and the Japanese yen for a digital currency. So the United States in this technological innovation effort is a bit in the middle of the pack, shall we, at best, in terms of looking at this. Others are ahead. Now, I don't think I don't analogize this, the winners of this, to the winners of a race. I don't think getting there first is by any means what's important. What is important is that we make sure that the values we hold dear, the values that have been built into our economy, values of free enterprise, values of a zone of privacy, and the balancing of privacy rights against issues of the government in law enforcement, that the right balance is there. We've got to make sure that our values are incorporated into the development of this new infrastructure. And if we do, then we're a winner. And that's what the Digital Dollar Project is advocating, is we don't want to be so late to the game that the development of this infrastructure worldwide bears the imprint of other values, values perhaps of state surveillance, values of state control of the economy, things that are not typically associated with the U.S. economy. We want to make sure, as we develop a digital currency, hopefully a digital currency that remains a key global reserve currency, that core U.S. social values are imprinted upon it. And that's why we think the United States needs to get in the game now and be a leader in innovation, a leader in development of this.
Yeah, that's really a compelling point. Before we go further, we have a clarifying question. You might have answered some of it in your last round. Can you see it?
I can, and I'll kind of repeat it out. It's a great question. The question here says, understanding the cross-border value, but how is a digital currency really different from conventional currency delivered electronically? And so I will point to two primary distinctions. So first and foremost, and most importantly, what we're talking about is creating an actual it's central bank liability. This is fiat money backed by the full faith and credit of a government, as opposed to commercial bank money, where the counterparty is the issuing bank. And that is a key distinction. So the most riskless form of currency is that which is backed by the central bank, in this case, the Fed. So that is kind of the number one distinction.
And let me just hold your thought 1 second, Daniel.
Please, yeah.
Most money that we use today is bank money. I think that's something folks don't realize. The majority of the money that's utilized to finance a mortgage, to put gasoline in a car, is all bank-issued money, and a bank stands behind it. That's different than the 8 or 9% of fiat that's used in the economy, where that's backed by the central bank. And what we're talking about with digital money is a representation on your phone, a token on your phone that is backed by the central bank. It's no different than the dollars in your wallet.
Exactly. And currently that's the way that retail individuals would hold a central bank liability, is just through physical cash. This represents tokenized form of that central bank money, if you will. So the second major distinction is between accounts-based systems and tokenization. So a lot of e-money models are predicated on there being a central party that's the one that controls a ledger effectively. And that can be very efficient. And again, part of the elements of our champion model is that the system be interoperable and operate alongside other types of payment mechanisms. But it is different to have an accounts-based system versus something that is a tokenized system, where the holder of the instrument holds a bearer instrument, much like physical cash. So that allows a lot more of an open architecture and infrastructure. And tokenization also unlocks programmability of money, meaning you can start wrapping smart contracts around tokenized cash in order to drive automation, to code in business logic, regulatory logic. There's much more you can do from an innovation perspective around a tokenized instrument than necessarily through an accounts-based system.
Daniel,
let me add one more, if I could, just one more example that I think will actually illustrate this.
I was going to ask
if you use Apple Pay in the supermarket, if you use Zen or Venmo, those may seem like electronic transactions. They are, but they tie back to an accounts-based system. They are message transactions that inform some intermediary somewhere to record on a ledger that value has moved from one person to another. So they are ultimately messaging. What we're talking about is using that same technology, whether it be an electronic email or whether it be a swipe transaction at a counter. But what would happen in those transactions is the money would actually move from one party to the other, as opposed to a message going from one party to the other, informing somebody else somewhere else to record the transaction. Now it's actually been done at the point of purchase or the point of the transaction.
Can you give some examples of the programmability and smart contract concept, how that could operate to change how we do things?
That's where this gets really interesting. So I'll give you an example. Take the whole industry, legal and otherwise, built around passing money from the living to the next generation. When someone dies, prepares to die, they may say, I need to pass my wealth to my children. And when I'm gone, all of that needs to take place, but I'm not there to control it anymore. So what am I going to do? I'm going to put it in a written statement that's then going to inform an executor or a trustee or some person who's backed by some institution. And there's going to be a set of instructions. And I'm going to be dead then, but I'm going to be basically relying on the altruism of that person, of the contractual enforceability of those contracts to force them to do the things that I put in this document. And, this has happened for generations, this way it happens. Well, imagine in a programmable contract, instead of that whole infrastructure, and I'm not saying to, I'm not calling for its destruction, because there'll be other forms built upon it. But imagine if you can program the contract and all the terms. Let's say that you're going to leave it to my children, provided that at age 30, they be sober and they've gotten a graduate degree. Well, at age 30, they can do a breathalyzer into their mobile device and have their credentials from their university automatically transferred. The money appears on their phone because it was programmed into digital money. And all of that infrastructure that's built there for trust and verification and contract enforcement would be hardwired in to the instrument, into the contract itself, and the money would in itself find itself in a interest-bearing account wherever it may be at the instructions of the grantor, and then transfer to the beneficiaries provided the right conditions are met. And so again, there's going to be some disintermediation here, but as there is, when we went from blacksmith shops to auto repair shops with the internal combustion engine, the same will happen here. There will be new infrastructure, new things to do, but it will create a digital precision of instructions that will pass beyond the grave, which is a whole new innovation in thinking. And that's just one example of how programmable money can really change society.
Yeah, and just to add one extra point on this, I really do think it's all about automation, and that it's that automation that's going to drive incredible efficiencies. So yes, you can program based on what Chris was outlining. You could have benefit systems that are designed this way. In the capital markets, when you think about clearing and settling of transactions, you could move to real time if you're using tokenized money, but maybe that's not optimal. And in fact, there are many instances where people would want to be able to net over a certain number of hours. Whatever the optimal efficient point would be in terms of settlement, you could effectively code that settlement logic into the money itself, and that will automate all of these processes. So over time, that's going to drive great efficiency, and it will reduce costs, and it will allow us to do a lot of things that previously would have been unworkable with manual processes. If you were using accounts-based systems, remember that too, that you're relying on a single party. There is a central party sitting in the middle. And that can very much so decrease the efficiency of trying to create an interconnected, automated society and system. So I really focus on the automation piece when you talk about programmability.
Which ultimately ties back to the point that you started on, Chris, about potential growth of financial inclusion as we get some of these friction costs pulled out of the financial system, which are so tremendous. We are running short on time. Let me ask you, if we were sitting in the shoes of the Federal Reserve trying to take this project on, what are the main challenges that are going to have to be worked through?
Well, there's a lot. The issue of the balance of privacy rights against the official sector's concerns for law enforcement and anti-money laundering, that's certainly a complex set of issues right there. Infrastructure, what is going to be the technology, the technological infrastructure that this is going to be built on? How do we make sure it's interoperable, not just with the accounts-based system, but with other central bank digital currencies around the world? That's going to be a key concern. There are folks that are worried about monetary policy overextension in many areas, money supply issues. That's going to be a concern. How do we, if we're going to use blockchain technology and distributed ledger, how do we make sure that points of contact are included in this with the right parameters around how they write to the blockchain technology? How do they conduct AML, KYC? There's issues around that. There are enough issues to keep a lot of people busy for a long time in just doing discrete pilots to explore each one of these. And the example I like to use is the space program. You know, it was in the 1950s that the United States built a consensus to go to the moon. But having decided to do that, they had no idea how they were going to get there. They had to first explore with putting objects into orbit. Then they had to explore with bringing them into the lunar orbit. Then they had to go and how do we actually bring humans into space, and how do we put humans on the moon? And each one of those built upon the learnings of the pilot programs they were doing. And that's the model we recommend. All these things need to be explored and explored carefully. The dollar's role in the global marketplace is far too important to take for granted with some, weekend legislative drafting system. Off we go, we're ready to do this. No, it needs to be built thoughtfully, carefully, step by step, innovation by innovation, till we get it right. And while that's happening, there's a lot for the public sector to learn from the private sector in what's going on with stable coins and other development. So the right way to do this is a good partnership between the public and private sector to get this right.
Yeah, let me ask you about that. When we were doing our prep call, I mentioned to you that AIR is launching something that we're calling the Regulatory Design Project. Same type of thinking, a massive undertaking to think about digitizing financial regulation and building the building blocks. And we did get a question from the audience. We only have a few minutes left. That said, he read today that Bank of Thailand expects key findings by year end for several aspects of a project, and we are going to be testing it. And then the question is, do you need pilots? And the answer to that is yes. I guess maybe we should end by talking a little more about your vision of the step-by-step process ahead, and also any advice that you have for policymakers.
Maybe I'll do this, Chris. I'll start for just a moment and then turn this back over to you, because I think you've been able to make some really great recommendations to policymakers recently on this front. But I see the question, and it's from a familiar face and friendly face, but it's a great question. And I think exactly to Chris's point, this is too complicated to just roll out overnight. So in our view, incremental steps in terms of piloting and testing, pressure test, for example, our champion model. Let's make sure the purported benefits are there. Let's make sure we've considered what the risks and challenges are. Let's look at the challenger models. But ultimately, we think the right way to do this is by kind of pressure testing and proving the concepts through pilots. And maybe I will let Chris kind of end on what we've been doing on that front.
Yeah, I mean, there's a great deal of interest in pilots. One of the things about the United States that my European friends always find so fascinating is how, while we're one big national economy, we're really a whole series of regional economies, all with their own issue sets. And the Fed presidencies reflect this. If you were to talk to Esther George at the Kansas City Fed, she's got issues of financial inclusion in rural areas, in her areas, with a dearth of banking activities. If you were to talk to Fed President Bostic in Atlanta, he's concerned with financial inclusion in Atlanta, and as is President Neil Kashkari up in Minneapolis. And so working with, say, Fed presidencies in their regional areas, we could do pilot programs that might experiment with elements of this for financial inclusion, or elements of how do we reach people in rural areas, say in the Kansas City area and the western regions. So we think pilot programs could be done both in series, but also in simultaneously looking at different elements of this. The privacy issue, so important to get right. One of the things that makes the dollar so attractive as a global reserve currency is that zone of privacy in smaller amounts that one enjoys. And I think that reflects the values of our society. And say a digital RMB or a digital currency may be developed by a non-democracy wouldn't have privacy as a core value, individual privacy. So we've got to get that right. I think that's why we recommend, let's start experimenting a series of discrete projects. Let's step back each one, test it out, see what we've learned, and then build the next level on. And if we do that, I think 5 to 10 years, we could be, starting to see a much broader development and utilization of the digital currency, which is so important for the future. It's that infrastructure on which our future of our economy will be built on, both in the United States and also around the world.
That's a perfect note to end on. If we were live at a conference, I would ask the audience to join in a round of applause. But Christian Carlo, Daniel Gorfine, I cannot thank you enough. It's been fascinating.
See you soon.
Thank you, Joanne.
Bye.